Welcome to our deep dive into Toronto real estate, especially for all you GTA residents out there. Today we're going deep into a collection of 20 fresh news articles.
Yeah, curated by Toronto realtor Manoj Atri. He really seems to have his finger on the pulse.
It's like having our own personal trend spotter. So whether you're thinking of buying, selling, or just trying to figure out this crazy rental market.
We're going to break down what all this news really means for you. Let's start with this article that really caught my eye.
Oh yeah, the one Manoj titled, Latest Big Rate Cut Could Spell Good News for Home Buying.
Couldn't have picked a better title because the Bank of Canada just chopped their policy rate again.
By 0.5%, down to 3.25%. It's the fifth cut in a row.
And the second supersized one, a whole 0.5% drop.
They usually reserve those big cuts for, like, emergencies. Are we in a financial crisis? I mean, the article digs into WHY. They might be making these moves.
Right, the economy isn't exactly booming. The Bank of Canada is saying it's not growing as fast as they'd hoped.
And they seem to be pointing fingers at the government's decision to reduce immigration levels.
Basically saying, hey, we need more people. More people means more demand for, well, everything, including housing.
But on top of that, the article mentions a huge risk factor, the U.S. potentially hitting us with those tariffs.
Yeah, especially with Donald Trump about to take office. Trade wars could be back on the table. It makes the future pretty uncertain for sure.
No kidding. But let's focus on what this rate cut means right now. Like, if you've got a variable rate mortgage.
Things are looking pretty good, actually. Your payments might go down, or at the very least, more of your money will go towards paying down the principal. That's the actual loan amount, not just the interest.
Either way, that's got to feel good. And the article even suggests that variable rates could fall below 5%.
Making them pretty attractive compared to fixed rates.
Which are more stubborn, likely to stay above 4%, for now at least. But here's something I bet most people haven't heard yet.
What's that?
This huge change just happened last month. You no longer need a stress test if you're switching lenders at renewal, as long as you keep the same amortization and loan amount.
So no more proving you can handle those higher interest rates, that stress test, just to shop around.
Exactly, it's gone. Which means
More competition between lenders, which could lead to better deals for you.
I think a lot of people are going to be refinancing soon.
And on top of that, all those programs to help first-time buyers are still in place, like the FHSA.
That's the one where you save for a down payment tax-free, right?
Exactly. And the withdrawals are tax-free too. Don't forget the home buyers plan either. You can borrow from your RRSP for a down payment.
Up to $60,000. Tax-free. They just increased that limit. It used to be $35,000.
They really want to get people into homes. Then there are land transfer tax rebates, the first-time home buyers tax credit.
And even a GST/HST rebate for new builds.
Yeah, it can seem overwhelming, all these different programs, but it's all designed to help you take that first step into homeownership.
Makes sense. But all these rate cuts, do they actually help renters? I mean, landlords have lower costs now, right?
It's supposed to trickle down like that, yeah. But the national average rent only dipped a little bit. November saw a 15-month low.
At $2,139.
Down just 1.6% from last year. But Toronto rents actually did see a decent drop.
Really? How much?
Down 9.4% year over year to $2,640. That's a 28-month low.
Okay, that is something.
But remember, even with the drop, rents are still way higher than they were a few years ago.
Yeah, true. So this rate cut, it's good news for some people, for sure.
But it definitely raises a bunch of questions.
Like, will those U.S. tariffs actually happen? And what about this whole immigration thing? I mean, the Bank of Canada seems pretty worried about that.
It's a big deal. The economy needs people, but the government's trying to tap the brakes on immigration. They say they're worried about inflation.
And speaking of inflation, will all this cheap credit actually make things more expensive? It's a lot to think about. It's like they're trying to stimulate the economy without letting things overheat. It's tricky.
It is. There's no question. This rate cut is a big deal, but it's just one piece of a much larger puzzle.
Exactly. We'll have to see how it all plays out.
Okay, so let's look at the next article Norris chose for us. It's called Bank of Canada, Government is Using Immigration as a Form of Stimulus.
Oh, this is from Better Dwelling. They always have a unique take on things.
And it's right on point, given our conversation about those rate cuts in immigration. The Bank of Canada is basically saying the government's reducing immigration to artificially pump up the economy.
So it's all about making the GDP growth numbers look good.
Exactly. Add more people, GDP goes up, but the Bank of Canada is saying that ignores the real problem, inflation.
And they're worried that all this cheap credit, with the rate cuts is going to make inflation even worse.
Yeah, they're not just focused on overall GDP, they're looking at per capita GDP growth too.
Per capita. So that's like how much wealth is created per person.
Exactly. It's a measure of individual prosperity. The Bank of Canada is basically saying just adding more people doesn't necessarily mean a better quality of life for individuals.
They're basically saying the government's being short-sighted.
Which is interesting because they're usually pretty careful about criticizing the government directly.
This is getting pretty political.
Yeah.
But let's move on to something a bit less controversial. The next article is about that big change to the stress test.
Ah, the stress test. Remember those days? It's hard to believe it's only been a month since that changed.
I know, right? November 21st, 2024. No more stress test when you switch lenders at renewal.
As long as you keep the same amortization and loan amount, huge win for consumers.
This article from Canadian Mortgage Professional, they're calling it "No Stress Test Needed for Mortgage Renewals When Switching Lenders."
Catchy title.
It'll definitely grab attention. I mean, this is going to shake things up in the mortgage industry, big time.
Lenders are going to have to work harder to keep their clients and offer better deals to attract new ones.
It's almost like this change is getting overshadowed by all the rate cut talk, but it's a huge deal, especially for anyone looking to refinance.
Yep, definitely a good time to shop around for a better rate. Speaking of good news, this next article is a breath of fresh air amidst all the economic stuff.
Oh, what's this one about?
It's about two realtors in London, Ontario, who are doing something really amazing to fight rent evictions.
Rent evictions, it's such a problem. Forcing people out of their homes just so landlords can charge more rent.
It's awful. But these guys, Tristan Squire-Smith and Johnny Hurricane, they're doing things differently.
The article's from CTV News London. It's called "Realtors Choose to Keep Apartment Deeply Affordable After Buying Building."
So these realtors bought a building for their new brokerage.
And I guess it came with an apartment upstairs.
Yeah, with a long-term tenant, Harold, who is paying well below market rent.
Classic rent eviction setup. So what did they do?
They renovated the apartment, made it even nicer for Harold. AD kept his rent affordable. Imagine that.
Wow, putting people over profit. It's amazing to see realtors actually fighting against this trend.
They're saying the city should make it easier for landlords to do this, keep rents affordable.
Shouldn't be so hard to do the right thing.
Well said. Okay, let's get back to the Toronto market. This next article from NLD Toronto is all about those dropping rents.
Finally, some good news for renters.
Maybe. The headline says it all. Toronto rents just hit a 28-month low.
Okay, so we're actually seeing those rate cuts trickle down.
Seems like it. The article says the average rent in Toronto dropped 9.4% year over year in November, bringing the average down to $2,640.
Not bad. Not bad at all.
And two-bedroom rentals saw the biggest drop, down 10% to an average of $3,115.
If you're looking for more space, now might be a good time to hunt for a rental.
Could be. But even with these drops, rents are still much higher than they were just a couple of years ago.
Yeah, true. Okay, what's next on Manoj's list?
This one's from Real Estate Magazine. It's called "Toronto Housing Market Saw Price Drops, Flat Sales in 2024.
Doesn't sound like the best year for the market.
It was a bit of a mixed bag. The article uses data from Wahi. They say the median sales price across the GTA actually declined by 2% year over year.
So it ended up at
$965,000. And the number of sales basically the same as the year before.
So kind of stagnant.
Yeah, pretty much. They talk about how those hopes for a spring rebound kind of fizzled out. And while the rate cuts in the second half of the year helped a bit, it wasn't enough to spark any major growth.
I guess with all the uncertainty, it's not really surprising.
Right. And on top of that, homes took longer to sell this year. The average days on market climbed to 24. That's up 5 days from 2023.
So buyers are taking their time. They have more leverage to negotiate now.
Exactly. It's definitely shifting the balance of power. And speaking of shifting, the article dives into the condo market, which hasn't been doing too well.
We've been hearing a lot about condos struggling. What's this article saying?
It seems the condo market in the GTA really underperformed compared to single-family homes. Condo sales dropped by 5%, and the median price fell by 3%.
Ending up at
$655,500.
Okay, so not a great year for condo sellers. What are the main factors driving this trend?
They're pointing to high inventory levels, probably from new developments and investors selling off their units. Too much supply pushes prices down.
Makes sense.
And on average, condos took 9 days longer to sell than single-family homes.
So yeah, definitely a tougher market for condos right now.
Now, this next article is a bit of a cautionary tale for landlords. It's from Fraser Valley Today, and it's about a landlord who got a nasty surprise after their long-term tenant moved out.
Oh no, what happened?
So this landlord, Gore, had rented his house to a single mother of three for 6 years. She always paid her rent on time, kept the outside of the house looking nice.
So it seemed like a reliable tenant.
You'd think so, right? But when she moved out, the inside of the house was a disaster. Damaged walls, broken appliances, ruined flooring. It was awful.
It's like a horror story for landlords.
It really highlights the importance of doing regular inspections, even with tenants who seem responsible.
Okay, so let's get back to the rate cut reactions. This next one's from CTV News London, and it's all about how experts in London, Ontario are viewing these cuts.
London experts react to latest interest rate cut. Catchy title, right?
Right to the point.
So Bill Matter, he's the CEO of the London St. Thomas Association of Realtors, he's saying that this latest rate cut on its own might not seem like a big deal.
0.5%. It's not nothing, but it's not huge either.
Exactly, but he thinks it's part of a bigger trend. Rates are going down, and that has a psychological effect on the market. He's optimistic about what it means for the new year.
Okay, so it's about creating momentum and making buyers and sellers feel more confident.
And they quote another expert, Mike Haddam. He's a mortgage broker in London. He's saying the rate cut is good for current homeowners with variable rate mortgages and D for potential buyers who are put off by high prices.
Win-win.
That's what he's saying. It's interesting to get these regional perspectives because sometimes it feels like all the focus is on Toronto and Vancouver.
Yeah, for sure. London's a good example of a market that's a bit under the radar but still very active.
Okay, ready for a deep dive into how those rate cuts actually work. This next article is from Better Dwelling, and it gets into the nitty-gritty of the monetary policy transmission mechanism.
Sounds pretty technical.
It's basically about how changes in the Bank of Canada's policy rate, that's the one they control, affect the entire economy.
It's like a chain reaction.
Exactly.
Hmm?
And the Bank of Canada is watching this process very closely, especially with all these rate cuts. They want to see how effective they are at stimulating the economy.
And probably looking for any unintended consequences.
And this is where it gets interesting, especially if you're thinking about buying a home or investing. If these rate cuts don't work, the Bank of Canada might consider quantitative easing.
Quantitative easing.
That sounds serious. What does it mean?
It's often called QE. It's a way for central banks to basically inject money directly into the financial system.
Like printing money.
Not quite. They do it by buying assets like government bonds.
So what does that do? It can push down long-term interest rates, making it easier for people and businesses to borrow money and hopefully stimulating the economy.
So if the Bank of Canada does this, QE, could it mean even lower mortgage rates?
It's definitely a possibility, which could make buying a home even more attractive.
Okay, something to keep an eye on for sure. What's next?
This next one's from Money Sense, and it tackles the big question on everyone's mind right now, inflation.
Will the Bank of Canada's rate cuts fuel inflation? Kitschy title.
Gets right to the heart of it. I mean, the Bank of Canada keeps saying they're committed to keeping inflation under control.
Their target is 2%, right?
Exactly. But the article's pointing out that these rate cuts could actually make things worse.
How so?
Lower rates make borrowing cheaper, which means people have more money to spend. More spending means more demand for goods and services.
Which means businesses can raise their prices,
Yeah.
which leads to inflation.
It's a vicious cycle. And the article's basically saying the Bank of Canada might be playing with fire here.
It's a tough balancing act for sure.
No kidding. Now, this next one from CTV News, it zooms out a bit and looks at the global picture.
Okay, so how are we doing compared to the rest of the world?
Canada's economy lags behind U.S. as growth slows. That's the headline.
So we're not doing so well.
And not compared to the U.S., no. Their economy is booming. We're lagging behind.
What does that mean for us?
Could put downward pressure on the Canadian dollar. Investors might be less interested in Canada if they think the U.S. is a better bet.
So yeah, the global economy definitely matters.
Big time. Okay, now for some expert commentary on the rate cuts. This one's from Canadian Mortgage Professional.
Always good to hear what the experts think.
This article quotes Benjamin Towle. He's a big-name deputy chief economist at CIBC World Markets.
Okay, so what's his take?
He's saying the rate cuts are good news for the housing market, no doubt, but he doesn't think they'll cause a crazy price surge.
So no sudden boom.
He doesn't think so. He's predicting prices will stabilize, leading to a more balanced market next year.
That sounds much more healthy, gradual, and sustainable.
Right. And he also points out that the rate cuts should make housing more affordable, which is what's really been holding things back.
Even a small drop in mortgage rates can make a big difference in monthly payments.
Exactly. And until housing is more attainable for more people, he thinks the market will stay pretty subdued.
Makes sense. Okay, what's next?
This one's from RM, and it dives into how different types of housing are performing within the Toronto market.
Oh, yeah. I think I know where this is going. Detached homes outperform condos in Toronto market.
You got it. They're basically saying that detached homes have been the strongest performers this year. They've weathered the storm better than other types of housing.
So people still want that detached house dream, more space, a yard.
Seems like it. And they think this trend will continue, with detached homes doing better than other types of housing next year.
What about condos? What's driving their struggles?
High inventory levels, those rising interest rates, and that shift in buyer preference towards larger spaces. It's a triple whammy for condos.
Yeah, not a good mix. But does the article offer any hope for the condo market?
They suggest that this dip in the condo market could be a good opportunity for investors.
How so?
Prices are down, so you might be able to find some good deals that'll pay off in the long run.
Okay, so it's all about timing and recognizing opportunity.
Now let's shift our focus to York Region with an article from yorkregion.com.
York Region's always an interesting area to watch. It's a mix of urban and suburban living, very popular with families.
And according to this article, York Region housing market mirrors GTA slowdown.
So it's been hit by the same forces as the rest of the GTA.
Yeah, pretty much. But the article does highlight some pockets within York Region that are doing better than others.
I guess that makes sense. Certain areas have stronger local economies, better amenities.
Exactly. Those areas tend to do better even during tough times. And overall, they're saying York Region is still a great place to buy or invest.
It's a bit more affordable than the core of Toronto, and it has a lot to offer.
Now get ready for a bit of a shock. This next one's from BlogTO.
Oh, BlogTO, they always have their finger on the pulse of the city.
This article's called Downtown Toronto Rents Plummet as Vacancy Rates Soar.
Downtown Toronto, really? I mean, that's usually the hottest rental market in the city.
It was, but things have changed.
I guess with the pandemic, so many people working from home, it's not as desirable to live downtown anymore.
That's what they're saying. Fewer people working in offices, less demand for rentals, vacancy rates going up. Landlords are even offering incentives like free rent months and lower security deposits.
The renters market downtown, I can't believe it.
It's wild. And the article suggesting this trend could continue, especially if more companies make remote work permanent.
It's definitely something to watch, for sure.
Right.
Okay, what's next?
This next article from the Star takes a more somber tone. It's about job losses.
Canada shades thousands of jobs as economic recovery stalls. Yeah, that's not good.
Not at all. Job security is a huge factor when it comes to housing. People need to feel confident about their future before they buy a home.
And if millions of jobs have been lost since the pandemic, it's going to make people hesitant.
Exactly. Sectors like tourism, hospitality, retail, they've been hit hard.
And even with those rate cuts, it's going to be tough for the housing market to fully recover if people are worried about their jobs.
Yeah, it's a reminder that the pandemic's effects are still being felt.
Okay, let's move on to something a bit more constructive. This next article is from the Globe and Mail, and it's all about government policies to tackle the affordability crisis.
Governments grapple with housing affordability crisis. They're definitely grappling, that's for sure.
What kind of solutions are they looking at?
Increasing the supply of affordable housing, tightening rules on foreign buyers, tax breaks for first-time buyers.
It's a complex problem, no easy answers.
That's what the article emphasizes. It's going to take a multifaceted approach. No silver bullet solution.
What's next on our list?
This one's from the Financial Post, and it looks at the construction industry, which is facing a lot of challenges right now.
Yeah, we need new homes to be built if we want to solve this supply problem. But construction's not exactly booming.
Construction industry faces pandemic hangover, supply disruptions, labor shortages, and soaring costs. That's the headline.
So it's a mess.
Kinda. They're talking about supply chain problems making it harder to get materials, a shortage of skilled workers, and the cost of materials going through the roof.
Yikes, that's a lot to deal with.
It's led to construction delays, higher costs for new homes, and it's probably going to stick around for a while.
So it's slowing down new housing development and making the supply problem even worse.
Yep, it's a domino effect.
Makes sense.
Yeah.
Okay, what's next?
We're back to the condo market with this one from Toronto Stories. Toronto condo market. What's driving the slowdown?
It's a good question. We've been talking a lot about the challenges facing condos. What new insights does this article offer?
It basically echoes a lot of what we've already discussed. High inventory, rising rates, people wanting bigger spaces.
But are all condos struggling equally?
The article points out that some segments are doing better than others, like condos in prime locations with great amenities.
So it's about location, location, location.
As always, they're predicting the condo market will stay soft for a while, but it could be a good time for investors to buy low and wait for the market to recover.
Okay, so potential opportunity amidst the challenges.
Now, for something a bit scarier, this next article is from the Toronto Sun.
Uh-oh, what's this one about?
Is a Canadian housing market crash on the horizon?
Crash. That's a scary word.
It gets people's attention. And the article does present some pretty dire predictions. They're saying the Canadian housing market is overvalued and due for a correction.
Okay, so what are their reasons for thinking this?
High household debt, rising interest rates, and the possibility of a recession.
Those are all valid points.
But to be fair, the article also presents the other side of the story.
So what are the reasons for not panicking?
They say there's still strong demand for housing, not enough supply, and the government's doing what it can to support the market.
So it's a classic debate, doom and gloom versus optimism.
And as always, the truth is probably somewhere in the middle.
It's a good reminder to be cautious, but not to overreact. What's next?
This is a feel-good story. From the National Post, against the odds, young couple achieves Toronto homeownership dream.
That's nice.
It's about a young couple who managed to buy their first home in Toronto, even with all the affordability challenges.
So there's still hope.
Definitely. They saved diligently, made sacrifices, did their research, and found a property that worked for them.
It's inspiring to see people achieve their dreams, even in a tough market.
Absolutely. Now, for a global perspective, this one's from the Financial Times.
Okay, let's see how Canada compares to the rest of the world.
Pandemic's Uneven Impact on Global Housing Markets. That's the title.
So everyone's been affected differently.
Exactly. Some countries are seeing booms, others are seeing slowdowns.
It's amazing how different things are around the world.
Yeah.
So what factors are driving these different outcomes?
It's a mix of government policies, economic conditions, how strong the economy is in each country, and demographic shifts, like how many people are moving in and out of different areas.
So where does Canada fit into this global picture?
They're saying Canada's been relatively resilient compared to some other countries, but we're still struggling with affordability and a lack of supply.
So not immune to global forces, but doing okay overall.
Now, this next article tackles a long-term challenge: climate change.
Climate change, the looming threat to Canada's housing market. That's from the Canadian Press. I mean, climate change affects everything.
It really does. And when it comes to housing, we need to start thinking about things like rising sea levels, extreme weather events, and how energy efficient our homes are.
So sustainability and resilience are becoming even more important.
Absolutely. Now, for something a bit more futuristic, this article is all about PropTech.
PropTech, yeah, I've heard that term. Property technology.
PropTech innovations are transforming the real estate landscape. That's the headline from TechCrunch.
So what kind of innovations are they talking about?
Online platforms for buying and selling homes, virtual reality tours so you can view properties remotely, and data analytics tools for property valuation.
It's all about making the real estate process smoother, more transparent, and more accessible.
Now, for a dose of economic reality, this one's from the Wall Street Journal.
Recession fears mount as economic headwinds intensify. Not exactly cheerful news.
No, not really. Recessions can have a big impact on the housing market.
How so?
People lose their jobs, they have less money to spend, they're less likely to buy a home.
Makes sense. So if there's a recession, what could that mean for the housing market?
Lower prices, fewer sales, things could get pretty stagnant.
Okay, so it's something to be aware of. But let's not dwell on the negative. What's next?
This one's from the Vancouver Sun, and it focuses on the Vancouver housing market.
Vancouver housing market. Steady growth amidst affordability challenges. I mean, Vancouver's always been known for its expensive housing.
Yeah, but the article's saying that despite those affordability challenges, the market has been seeing steady growth.
So what's driving that growth?
Population growth, some foreign investment, and government policies that are trying to balance things out.
So Vancouver's dealing with similar issues to Toronto, just on a different scale.
They're predicting the market will stay pretty stable in the near term. Moderate price increases, continued demand.
Okay, so not as volatile as it's been in the past. What's next?
This one's from the Montreal Gazette, and it paints a very different picture.
Oh, about Montreal. I've heard that's a much more affordable market.
Montreal housing market. A beacon of affordability in Canada, that's the headline.
So what's making Montreal so attractive?
They've got a strong economy, a growing population, and a much lower cost of living compared to Toronto or Vancouver.
And how's the market performing?
Steady growth, moderate price increases, more sales. They're saying this positive momentum will probably continue, which makes Montreal a really good option for buyers and investors.
Yeah, I've heard a lot of people moving to Montreal from Toronto.
Makes sense. It's a great city. Okay, let's shift our focus to Calgary.
Calgary housing market. Signs of recovery amid energy sector volatility. That's from the Calgary Herald,
Calgary's always interesting because its economy is so tied to oil and gas.
which has been pretty volatile lately.
Yeah, and that's definitely had an impact on the housing market. But the article's saying there are signs of recovery.
Like what?
Some price increases, more sales activity. They're predicting the market will stay relatively stable in the near term, moderate price growth, continued demand.
So Calgary's on the rebound.
It seems so. Now let's look at another Alberta city, Edmonton.
Edmonton housing market. Stable growth driven by diverse economy. This is from the Edmonton Journal. I mean, Edmonton has a much more diversified economy than Calgary.
Exactly. And that's a big reason why their housing market is doing so well.
So what's driving the growth in Edmonton?
A stable government sector, a growing population, and a relatively affordable cost of living. They're seeing steady growth, moderate price increases, and more sales.
Sounds like a pretty balanced market.
Yeah, they're predicting this positive momentum will continue, making Edmonton a solid choice for buyers and investors.
Okay, so another city to consider. What's next?
Let's head east to Winnipeg.
Winnipeg. I've always heard it's incredibly affordable.
Winnipeg housing market. Affordability fuels steady growth. That's the headline from the Winnipeg Free Press.
So what are they saying about the market?
Winnipeg's affordability is a huge draw, combined with a stable economy and a growing population. They're seeing steady growth, moderate price increases, and more sales activity.
Sounds like a great option for people who are priced out of other markets.
And they think this positive momentum will continue, making Winnipeg attractive for those seeking a good quality of life at a reasonable price.
Okay, another one for the list. What's next?
Let's move on to Regina.
Regina. That's the capital of Saskatchewan, right?
Yep. And their housing market is doing pretty well, too.
Regina housing market. Stable growth and affordability attract buyers. That's the headline from the Regina Leader Post.
So what's driving the market there? A stable government sector, they're working to diversify their economy, and they've got a growing population. All good signs. The Regina market is experiencing steady growth, moderate price appreciation, more sales activity.
Okay, so another steady, stable market.
And they think this positive momentum will continue, making Regina a solid choice for those seeking affordability and a steady housing market.
Cool. What's next?
Let's head over to Saskatoon.
Saskatoon. I have a friend who lives there. She loves it.
Saskatoon housing market. Growth fueled by young population and affordability. That's the headline from the Saskatoon Star-Phoenix.
So it's a young city attracting a lot of new people.
Exactly. And that's driving a lot of the growth in their housing market. They've got a growing economy, affordability is a big draw, and they're seeing steady growth, moderate price appreciation, and increased sales activity.
Sounds like a city with a lot of potential.
They're saying this positive momentum will probably continue, making Saskatoon a good option for buyers and investors.
Okay, so another one to keep on the radar. What's next?
Let's head east to Halifax.
Oh, Halifax. Beautiful city.
Halifax housing market. Strong growth continues amidst affordability concerns. That's from the Halifax Chronicle-Herald.
So they're seeing strong growth, but affordability is becoming an issue.
Pretty much. They've got a growing economy, more people are moving there, and it's still relatively affordable compared to some other major cities. But prices have been rising pretty quickly, so affordability is something to watch.
Yeah, makes sense, but overall, it sounds like a strong market.
And they think this positive momentum will continue, making Halifax attractive for people seeking a growing economy and a high quality of life.
Okay, cool. What's next?
Let's go to St. John's.
St. John's, Newfoundland.
Yep, the capital city. And according to the St. John's Telegram, their housing market is doing pretty well.
St. John's housing market. Steady growth, driven by stable economy and affordability. Okay, so stable growth and affordable prices.
Exactly. They've got a stable economy, a growing population, and they're saying this positive momentum will likely continue, making St. John's a good choice for those seeking affordability and a high quality of life.
Sounds like a beautiful place to live.
Okay, ready for another island adventure? Let's head to Charlottetown.
Charlottetown, Prince Edward Island, and of Green Gables country.
Charlottetown housing market. Steady growth and affordability attract buyers. That's from the Charlottetown Guardian.
So what's attracting people to Charlottetown?
A growing economy, more people are moving there, and affordability is a big draw. They're seeing steady growth, moderate price appreciation, more sales activity,
House charming?
and they're predicting this positive momentum will continue, making Charlottetown an attractive choice for those seeking a high quality of life at a reasonable price.
Okay, another one to add to the list. What's next?
Let's venture north to Yellowknife.
Yellowknife. Now that's a different kind of market, way up north.
Yellowknife housing market. Signs of stability amid fluctuating mining sector. That's the headline from the Yellowknife News.
So their market's tied to the mining industry.
Yeah, which has been up and down lately. But the article's saying there are signs of stability, some moderate price growth, more sales activity.
So things are looking up.
They're predicting the market will stay relatively stable in the near term.
Makes sense. Okay, what's next?
We're going even further north to Iqaluit.
Iqaluit. That's really remote.
Iqaluit housing market. Stable growth despite high cost of Iqaluit housing market. Stable growth despite high cost of living. That's from the Iqaluit Nunatsiaq News.
It's got to be expensive to live there, right? I mean, just getting things up there.
The article talks about that, yeah. High cost of living, limited supply of housing. But it's still showing signs of recovery, moderate price growth, more sales.
So people are still moving there. What's driving that?
It's a unique place. The article mentions a stable government sector, plus the appeal for folks who want that remote, culturally rich lifestyle.
Makes sense. Okay, where are we off to next?
Let's travel to Whitehorse. The Whitehorse Star has an article titled Whitehorse Housing Market, Steady Growth Fueled by Tourism and Stable Economy.
Whitehorse, Yukon. That's got to be beautiful.
It is. The article talks about the tourism industry growing, a stable government sector. But yeah, it's not cheap to live there, being so remote. They're seeing steady growth, though. Moderate price increases, more sales.
That's like a pretty solid market.
And they think it'll keep going strong, attracting folks who want a unique experience, a beautiful place to live.
Okay, so we've covered a lot of different cities across Canada. What's the overall national picture looking like?
Well, the Canadian Real Estate Association has an article titled Canadian Housing Market Outlook, Balanced Growth Expected in 2025.
Balanced growth. I like the sound of that.
Yeah.
But it feels like things have been anything BBT balanced lately.
The article acknowledges that, yeah, the pandemic, rising interest rates, supply chain issues, it's been a roller coaster. Prices going up in some places, down in others. But they think things are going to even out. Moderate price growth, continued demand.
Okay, so what's giving them that confidence?
A growing population, a strong economy, and low unemployment, those are all good signs. But they're not ignoring the potential problems.
Like what?
Interest rates could keep going up, inflation's still a concern, and there's all this global uncertainty, with what's happening in the U.S. and other parts of the world. Those things could throw a wrench in the works.
Makes sense.
Yeah.
It's good to be cautiously optimistic, but also aware of the risks.
Exactly. Now, let's dive a little deeper into how the Bank of Canada actually influences the housing market.
Oh yeah, this article's from the Bank of Canada itself. Understanding the Bank of Canada's role in the housing market.
So they're explaining how they set interest rates and the factors they consider, like inflation, economic growth, and employment. Their big goal is to keep inflation stable, between 1% and 3%.
Right, we've heard a lot about that 2% target.
And to hit that target, they adjust their policy interest rate, which affects how much it costs to borrow money. So that impacts mortgage rates, and it influences how much people are spending.
So their decisions have a ripple effect throughout the whole economy.
It's all connected. And they emphasize that they're making decisions based on data, trying to predict what's going to happen in the future. They look at all sorts of economic indicators and potential risks.
It's a tough job for sure. A lot of responsibility. What's next on the list?
Let's look at the government's role with this article from the Department of Finance. Government of Canada Housing Policies, Promoting Affordability and Accessibility.
It's good to see the government taking this seriously.
They're outlining their different housing policies in this article, things like increasing the supply of affordable housing, offering tax incentives for first-time buyers, and regulating foreign investment in real estate.
Those are all important steps. It's about making sure everyone has a place to live, not just those who can afford it.
And this next article from Statistics Canada, it dives into something we haven't talked about much. Demographic.
Oh yeah, demographics like population growth and how that affects the housing market.
Yeah.
This is demographic trends shaping Canada's housing market.
It's all connected, right? The article talks about how Canada's population is growing through births and immigration, which means more demand for housing. And the number of households is going up too, putting more pressure on the housing supply.
So more people, more households, more demand for housing. Makes sense.
And they also look at migration patterns, how people are moving within Canada and from other countries. That can really impact different regions. Some places are growing faster than others.
Okay, so it's not just about overall growth, it's about where that growth is happening. What's next?
Now let's look at housing construction with an article from the Canada Mortgage and Housing Corporation, CMHC, titled Housing Market Activity, Tracking Housing Starts, Completions, and Inventories.
The CMHC, they're the ones who provide mortgage insurance, right?
They do that, and they also do a lot of research on the housing market. They track things like housing starts, how many new homes are being built, completions, how many are finished, and inventories, how many are available for sale or rent.
So they're keeping track of the supply side of things.
They're saying housing starts have been strong, a lot of construction is happening, but they're worried about those supply chain issues and the labor shortage, which could affect how much gets built in the future.
Yeah, those problems are affecting everything these days.
The good news is more housing units are being finished, which helps meet the demand. And they're keeping an eye on inventories to see how balanced things are between supply and demand.
Okay, so a lot of data to crunch. What's next?
Let's turn to the Conference Board of Canada for their economic outlet.
Okay, always good to hear from them. They have a solid reputation. This is Canadian Economic Outlook, Potential Impacts on the Housing Market.
They're forecasting moderate economic growth for Canada in the coming years, which is good news. They say a strong job market, low unemployment, and continued investment will support that growth.
So things are looking good.
Overall, yes. But there are those potential risks. Inflation, supply chain problems, global uncertainty, those things could slow things down, even cause prices to drop in some areas.
Okay, so it's not all smooth sailing.
This next article dives into mortgage lending trends. It's from the Canadian Association of Accredited Mortgage Professionals, CAMP, titled Mortgage Market Update, Trends and Insights for Homebuyers.
CMP, they represent mortgage brokers and agents, right?
Exactly. And they're talking about the latest trends in mortgage lending. Interest rates have been going up, which makes borrowing more expensive. They also talk about those stricter mortgage qualification rules that were put in place a while back.
Right, the stress test,
Yeah.
to make sure people can still afford their mortgage even if rates go up.
It's all about protecting borrowers. And they explain the different types of mortgages out there, fixed rate, variable rate, hybrid mortgages, so people can understand the options and make the best choice for their situation.
That's really helpful information for anyone looking to buy a home. What's next on our list?
Now let's turn to the Real Estate Council of Ontario, RECO, for an article titled Understanding Real Estate Regulations and Consumer Protection in Ontario.
RECO, they regulate real estate professionals in Ontario, right?
That's right. They make sure everyone's playing by the rules.
Yeah.
They license real estate professionals, investigate complaints, and can take action against anyone who's doing something shady.
It's good to know there's someone looking out for consumers.
They also educate consumers about their rights and responsibilities when buying or selling real estate, so everyone's informed and protected.
Makes sense. Well, I think we've covered a lot of ground today. It's been a fascinating deep dive into the world of Toronto real estate and beyond.
Big thanks to Manoj Atri for curating this collection of 20 news articles. He's really given us a lot to think about.
It's clear he's not trying to push a buy now message, but he is emphasizing the importance of being prepared.
Exactly. Do your research, talk to the experts, get your finances in order, and figure out what your goals are. Knowledge is power.
And remember, the market is always changing, so staying informed is key. Keep learning, keep exploring, and who knows, maybe you'll find that perfect opportunity.
Well said. Thanks for joining us on this deep dive. Until next time.